On September 3, 2024, thousands of small business owners opened a routine email. Their annual Canva team subscription fee was jumping from $120 to $500. In Australia, annual team costs scaled from $480 to over $2,400. Within hours, thousands of furious customers flooded social media, threatening to cancel their accounts. Canva was no longer just the friendly pastel app built for quick social posts. Beneath its simple drag-and-drop interface lies an aggressive software engine. The company is hunting corporate budgets to sustain a $42 billion valuation. The story begins in Sydney, Australia in 2013. Chief Executive Melanie Perkins co-founded Canva alongside Cliff Obrecht and Cameron Adams. Their founding pitch was simple: make graphic design accessible to non-professionals. In its early days, over 100 Silicon Valley venture capitalists rejected the startup. Investors dismissed a drag-and-drop design tool as a toy, but everyday users adopted the platform by the millions. By September 2021, Canva raised funding at a $40 billion valuation. It established Melanie Perkins as the head of the world's most valuable female-led startup. For 8 consecutive years, Canva achieved something rare in tech: net profitability. By 2023, the company crossed $2 billion in annual recurring revenue. Then came artificial intelligence. Chief Product Officer Cameron Adams spearheaded the integration of generative AI features. In a 2023 interview, Melanie Perkins declared that technology required immediate adaptation. Canva launched Magic Studio and native text-to-image AI tools across its suite. User adoption was instantaneous and massive. According to company metrics, users interacted with Canva AI features 800 million times monthly. Native generative features were used over 16 billion times across the platform. But generative artificial intelligence introduced a severe problem: relentless compute costs. Unlike standard software tools, every AI prompt incurs real cloud computing expenses. Generating images thousands of times per second eroded traditional high software margins. Flat subscriptions for small business teams were no longer covering server expenditures. Canva needed enterprise corporate budgets to absorb rising technology costs. On May 23, 2024, Canva staged its biggest corporate presentation yet. Speaking at the YouTube Theater in Los Angeles, Melanie Perkins took the stage. Flanked by Fortune 500 logos, she unveiled Canva Enterprise and Visual Suite 2.0. Perkins declared that Canva was now unifying distinct enterprise ecosystems. The company was shedding its reputation as a consumer graphic utility. It was taking direct aim at legacy creative software giant Adobe. To capture professional creatives, Canva went on a massive acquisition spree. In March 2024, Canva acquired United Kingdom software company Serif. The $380 million deal handed Canva ownership of the Affinity Suite. Suddenly, Canva possessed professional vector, photo editing, and publishing tools. 4 months later, Canva bought Australian generative AI lab Leonardo AI. The $370 million transaction secured native foundation models like Phoenix. Cameron Adams stated the partnership brought world-first breakthroughs in creativity. By early 2026, Canva acquired animation developer Cavalry and advertising tool Mango AI. In total, Canva spent $750 million building an enterprise asset stack. The acquisition spree positioned Canva to pitch corporate software managers directly. Today, 95% of Fortune 500 companies have employees using Canva. Enterprise accounts generate roughly 20% of total annual revenue. But acquiring software labs and powering AI clusters required massive ongoing revenue. Private market investors backed the company ahead of a planned public market debut. To keep margins clean for Wall Street, Canva made a decision that sparked widespread anger. In August and September 2024, Canva notified subscribers of sweeping rate hikes. The price increases targeted small business accounts on the Canva Teams plan. In the United States, 5-user team accounts jumped from $120 to $500 per year. In Australia, monthly flat fees shifted to $40.50 per user. Small Australian teams saw annual costs surge from $480 to over $2,400. Company spokesperson Louisa Green defended the price update to news outlets. Green said the change reflected an expanded product experience for longtime users. For small agencies and independent creators, a 300% increase was unbearable. Online communities on X, Reddit, and Threads exploded with immediate outrage. Subscribers accused Canva of adopting the exact software pricing models it claimed to disrupt. Users threatened to cancel subscriptions and return to Adobe Creative Cloud. The public revolt threatened to damage the populist brand image Canva carefully built. Canva executives recognized that user erosion risked undermining market confidence. On October 9, 2024, Canva issued a formal post called "The Price pricing promise, executives walked back the price hikes for early small business subscribers. Existing small team accounts were grandfathered at lower historical rates. In a Fast Company interview, Melanie Perkins addressed the sudden reversal. Perkins claimed Canva actually listens to its community, calling it an atypical corporate response. She confirmed the company reverted the pricing change for legacy account holders. However, higher subscription rates remained firmly in place for new customers. Canva established a dual pricing strategy to protect its user base while securing revenue. The tactical retreat diffused public backlash without harming enterprise expansion plans. Despite the temporary PR storm, Canva financial underlying metrics remained extremely strong. In July 2024, annual recurring revenue had hit $2.4 billion. By late 2024, annual recurring revenue reached $3 billion. Entering 2026, Canva reported annual revenue approaching $3.5 billion. Its annual recurring revenue run rate touched $4 billion. Platform scale reached over 260 million monthly active users worldwide. Paid subscribers expanded to 31 million seats across consumer and business tiers. Institutional financial markets took notice of the company's strong cash flow. On August 22, 2025, Canva completed a secondary employee stock sale. Backed by major investors like Fidelity and JP Morgan, the transaction valued Canva at $42 billion. The $42 billion figure erased valuation markdowns suffered during the 2022 market slowdown. The transaction unlocked immense wealth for Canva founding team. Melanie Perkins and Cliff Obrecht each maintain equity stakes of roughly 18%. At a $42 billion valuation, their individual holdings are worth over $7 billion each. Co-founder Cameron Adams holds a 9% stake worth nearly $4 billion. Through the Giving Pledge, Perkins and Obrecht pledged over 80% of their wealth to charity. The Canva Foundation has dispersed over $80 million to charitable programs worldwide. Yet the financial trajectory highlights the tension between consumer roots and enterprise incentives. Canva was built on a promise to make design affordable and accessible for everyone. Sustaining a multi-billion-dollar software engine requires capturing high-yield corporate contracts. Generative artificial intelligence infrastructure requires compute investment that small subscriptions cannot support alone. Canva evolved from a consumer utility into a B2B enterprise software player. By acquiring Serif and Leonardo AI, Canva built a wall to counter Adobe Creative Cloud. Visual Suite 2.0 integrated spreadsheets, whiteboards, video editing, and AI graphics. Corporate managers gain centralized control over brand assets across global offices. For Adobe, Canva Enterprise Push remains a persistent competitive threat. When corporate workers need fast visuals, they default to Canva templates rather than Adobe desktop tools. That corporate usage gives Canva pricing leverage in enterprise software sales. As Canva prepares for its public stock debut, Wall Street will examine margins closely. Public software markets demand consistent revenue expansion and high profit margins. The pricing controversy of 2024 highlighted how delicate that balance is. Canva must expand revenue per user while maintaining its core creative community. The dual pricing structure bought time, but compute infrastructure expenses remain permanent. Every AI feature rolled out adds computing requirements that must be funded. If corporate seat expansion slows, Canva may face pressure to adjust rates again. For now, the company momentum remains exceptional across key financial metrics. 8 straight years of net profitability sets Canva apart from many software peers. Its active user base of 260 million creators provides a vast funnel. The transition from drag-and-drop template app to software powerhouse is nearly complete. What began as an Australian startup in 2013 became a technology giant. Melanie Perkins proved that simple visual software could capture hundreds of millions of users, but staying at the top of the software industry requires constant corporate expansion. Canva is no longer just a cute design app. It is an enterprise software titan weaponizing generative artificial intelligence to capture corporate budgets.